again, July inflation rising to 2.7%, putting year-to-date consumer prices at 2.5% so far. Still within government targets. Let's make sense of this, as well as other data on the economic front. To help us, we have Calixto Chikiamco, a columnist at Business Road and also the president of the Foundation for Economic Reform. Good morning, Sir Calixto. Thank you for joining us in the show this morning.
Good morning, Jess. Thank you for having me.
All right, sir. First, your thoughts. July inflation again at 2.7%, beating analyst estimates of 2.5%. That also puts us at 2.5% a year to date. Your reaction, at least?
Well, it's just nominal. I mean, it's just only 0.2%. At the same time, it's not unexpected given the new health protocols. And as you mentioned, some of those cost increases were from domestic plane tickets and also from public transport, where they have to observe physical distancing and therefore fewer passengers per vehicle.
And that pretty much is still within benign territory here. How do you think might this in any way influence the BSP in their next policy actions moving forward? Or is it at least time for the central bank to hold off for now?
Well, right now, especially with the new MECQ, I think demand will continue to be very soft. And I'm sure the central bank will factor that in whether to lower interest rates further or. But as of now, really, the market's very liquid. The problem really is demand is very weak, and therefore, inflation is quite mild.
Mm-hmm. Now, also, you have other data coming in, trade data, June exports falling 13.3% to $5.3 billion, imports likewise dropping 24%, putting us at a trade deficit of $1.3 billion, narrower than last month's, and all things considered, lower than what economists expected. Your thoughts on this mean recovery might in fact be already in sight?
I think it is too early to say, especially now. Again, we have moved to another lockdown, which will create a lot of uncertainty for businesses, whether how they will move forward, given the uncertainties about containing the pandemic and also the uncertainties of the government response. Whether, again, down the road there will be another lockdown. So business will probably hold off in even in maintaining their operations.
And so much of this uncertainty, I mean, MECQ is just slated for the next 2 weeks here, and you have the central bank already alleviating fears, saying that the impact is going to be limited. But how do you think might that affect the sentiment of investors?
Oh, well, as I said, the biggest concern of investors is really that there is no plan to contain the pandemic. We are already, I think, number one in terms of cases in Southeast Asia, and still the government has to resort to very stringent lockdowns, which take a huge toll on the economy. So the government has to find some other way to contain the pandemic rather than these hard lockdowns, which cost the economy a lot.
Mm-hmm. And at the same time, sir, we're expecting GDP figures tomorrow for the second quarter. What's your outlook? Are you joining the chorus of voices saying we might see our deepest contraction yet?
Oh, yes. I think we will see our deepest contraction during the second quarter. I think I joined with some of my colleagues who think that contraction can be as much as 10%, double digit, for the second quarter. So it's not going to be pretty.
Mm-hmm. But do you think that a 10% contraction would be somehow still tolerable for the economy?
Well, again, it depends if you are projecting a swift recovery, a V-shaped recovery, but I don't think that's going to happen. We're going to see an L-shaped recovery. In fact, a long L. given the uncertainties of this pandemic, they say, of course, that a vaccine is around the corner. But again, there's still a lot of uncertainties of the expense of this vaccine, the effectivity, how long it would take. It might turn out to be like AIDS in the sense that there's been no vaccine developed for AIDS. So that's the biggest problem. A lot of uncertainties in the future.
L-shaped recovery, sir, do I take it to mean you don't see things picking up by the third quarter, just like what some economists and some of our economic managers are at least hinting at?
Well, of course, if the economy opens up, there will be some recovery, but we are going to be far off from where we started, the pre-pandemic levels. So you'll just have a base effect. Maybe you can see some increase, but going back to our GDP per capita before, I think that's going to take some time.
So definitely no signs of a Merry Christmas, at least for the year, do you think?
Oh yeah. Especially for the millions of unemployed. As of April, I think there were 7 million unemployed, and labor participation went down. So the employment picture is very grim.
And speaking of which, again, that's one of the main driving force of the economy, employment, and that's been seeing declines like what you did say. Unemployment jumping to a record 17.7% in April, and the ADB is saying that's bound to peak some more in June at 22%. Do you expect the situation to just get worse from here on?
Yes. Again, with consumer spending not picking up because of the fears of the virus and with no clear plan. At the same time, the problem is so far what we're given is really fear of everything. And consumption spending is about 72% of the economy. So I think it's going to take some time before consumer confidence comes back.
But at the same time, since lockdowns were eased primarily a few months after quarantine measures were put in place, do you somehow expect some form of recovery in terms of employment since lockdowns were already eased?
Oh yeah, some maybe from the June levels there'll be probably some temporary increase, but the problem is that mobility is very much restricted. So even if you say that you have loosened the restrictions, people still can't go to work. So that has limited the recovery, even if the government had loosened the restrictions.
And would you have any picture at least on which particular work segments were badly hit by the pandemic?
For sure, those that require a lot of interaction, tourism, events, the events business, retail establishments, so all that activities that need, physical contact, those businesses will really be badly affected.
Now,
And of course, I just want to say that, of course, the problem also is OFW remittances have dropped significantly, and all those businesses that sort of depend on OFWs will be also affected.
and that, in a way, also affecting employment numbers as well. And since while we're at it, remittance likewise plunging by 19%, the highest in decades. Now, how should authorities offset this?
The reduction in remittances.
Remittances, exactly, sir.
Well, I don't know how much they can do to offset the remittances. Of course, it's fortunate that we have record international reserves to cushion us from this reduction in remittances. So I think though that the government should do some stimulus spending. As of now, I think the amount in Bayanihan 2 is quite small. I think it's about 140 billion. So I think it's not going to be enough. at the same time, the Create bill is mainly about tax cuts. And I'm not sure that companies will start investing just because there are tax cuts. After all, a number of them are facing losses. So even if you have a 5% reduction in income tax, if 25% of zero is still zero.
Mm-hmm. So, meaning to say, sir, you think that the current stimulus packages are not enough to somehow bolster or support growth rather. At the same time, you have lawmakers wanting bayanihan to be reviewed, saying that the 140 billion pesos will not be enough, especially now that you have NCR and surrounding provinces reverting to MECQ.
Yes, if you're talking about those two packages of Create and Bayanihan 2, I think that's not going to be enough. However, I think Congress has put up a rice bill, which is about 1.3 trillion. But it wasn't mentioned by the president in his zona, so I don't know the fate of that bill. It was already approved by the House. So I don't know if the Senate will take it up. But certainly, I think a much bigger amount than the 140 billion is probably called for.
Okay, and lastly, sir, what's your growth outlook for the country? When do you see recovery happening at least?
Well, for the entire year, I probably GDP growth will be in negative territory. I joined with my colleague and fellow columnist Romy Bernardo in projecting about 7% contraction. It's probably the most pessimistic of the others, but I think it's realistic, especially given the fact that, again, there's no clear path forward in managing the pandemic, and we keep having this intermittent stop, start, go type of economic activity.
All right. Thank you very much for your insights, Sir Calixto Chikiamco, a business world columnist and also the president of the Foundation for Economic Reform. Thank you, sir.
Okay. Thank you.